Today's episode, we are going to take a quick look at some great news in the semiconductor industry. You guys know this is my favorite market, and it's all thanks to Taiwan Semiconductor's amazing earnings. So today's episode is going to be broken down into the following. First, we're going to take a quick overview on their earnings. Second, we're going to take a quick look at some highlights. And finally, I'm going to share my overall thoughts. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. And earnings season is starting back up. TSM is the first one I have done so far. Again, this presentation is free and it is included in my weekly newsletter. All right, so Taiwan Semiconductor reported their earnings this morning, and we can see the stock price is up 6.39% right now. And this is pretty much when most of growth stocks and most of the market is still kind of taking a hit. And 6.4% is pretty impressive, especially for a company this size of a market cap of $658 billion, right? You very rarely see a company this big kind of move with that kind of velocity, and it's all thanks to that overall earnings. Let's take a quick look at the overview. Q4 revenue and take a quick look at US dollars was $15.74 billion. That was up about 24% year over year, and it was up about 5.8% quarter over quarter. One of the big reasons I want to say stock price is up outside of guidance, which we'll look at, is this revenue did beat analyst expectations. Then we can see gross margins were 52.7, operating margins were 41.7, profit margins are as high as 37.9 for the quarter. These are up quarter over quarter. Unfortunately, they are a bit down year over year. One of the biggest reasons I want to say is obviously a nice increase in capital expenses to some extent have kind of driven a little bit year over year growth, and we're going to see. Next, they kind of gave us a Q1 outlook, and for Q1 they expect about $16.6 billion to $17.2 billion, and this is much higher than analyst expectations. Let's see if I have analyst expectations here. Yep, we can see revenue estimates were expecting somewhere around 15.84 for the March 2022. So they are expecting much more growth there. I do believe this is the prime reason the overall market is up, especially the overall stock is up. They expect gross margins to be 53 to 55%, operating margins to be about 42 and 44%. A little bit nice, a little bit increased quarter over quarter compared to this most recent quarter. They do mention that the huge growth in revenue is driven by high performance computing demand. This is your data centers, right? Data center servers, enterprise servers. So this is pretty impressive. And if we are in other semiconductor companies, it can kind of bring kind of a bullish sentiment towards there. They're also seeing a nice increase in automotive recovery. Unfortunately, they are seeing a bit of milder seasonality in the phones compared to usual. That one kind of struck me a little bit. Fortunately, I'm not much in any mobile industry companies, but if you are, just something to keep in mind of. All right, so that was a quick look at their earnings. So nice overview. I hope you guys enjoy it. Now let's take a quick look at some of the highlights and some of the things that really grabbed my attention. But before we begin, let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. All right, so next I wanted to take a quick look at how their revenue was broken, 1 by technology and 2 by market. And here we can see from their investor slides for Q1 of 2021, revenue by technology. About 50% of the revenue comes from just 2 chip size, the 7 nanometers and the 5 nanometers. We can see 5 nanometer was about 23%, 7 nanometer was about 27%. And one thing what we're seeing is a huge growth in the 5 nanometer chips. We can see compared to just in second quarter of 2020, so about a year and a half ago, 5 nanometer was nowhere near, wasn't even kind of collecting any form of revenue for this company, but the overall technological advancement of kind of processing units now using 5 nanometer, it has become a nice player, almost collecting a quarter of revenue this most recent quarter. So we can see revenue by technology in 2021 here. Now here's where I think is pretty cool. The quarter 2021 revenue by platform, most of the revenue comes from two main markets, the smartphone and the high performance computing. Here in the high performance computing, this is where you get your processors and your graphics cards. In your smartphones, you get any type of chips that deal obviously within that market. But what I do want to say is all the markets that they're in this quarter grew dramatically. Automobile, for example, grew 10%. Smartphone grew 7%. High performance grew 3%. Quarter over quarter. These are not year over year growth. These are quarter over quarter growth. And if we take a quick look at the overall 2021 revenue, again, we can see high performance computing. Again, these are the chips that go on data servers, graphics cards, processors. That makes up 37%. Smartphones make up 44%. And now if we take a nice look at growth rate year over year, automotive grew 51%. Remember, we're kind of seeing a recovery in automotive market, so you would expect that to see it. But the one that I'm super excited about is look at that high performance computing, 34%. I do believe this bodes well for companies like AMD, Intel, and NVDA to some extent. Then you have the smartphone industry up 8% compared to the same time last year. And you have the Internet of Things also up 21%. So we can see the overall market is still growing at impressive levels. Now, I do want to talk about something that I found super interesting is CapEx. So capital expenses. This is how the company uses their money to kind of either improve their overall technology, maybe investing in kind of foundries and new equipment. And look at this growth. For 2022, they expect CapEx to be somewhere between $40 to $44 billion. That's a lot of money. Where 2021, they used about 30 billion. So in just a year, they're growing dramatically the amount of CapEx. And in 2020, they used about 18 billion. So this is insane. They do mention that 70 to 80% of CapEx will be spent for their advanced technology. And what they call advanced technology is anything below 7 nanometers. So 7 nanometers, 5 nanometers technology. And that's where they're seeing most of the growth. That's where obviously most of the revenue comes from at the moment, and that's where they believe they're going to spend most of their CapEx. So pretty interesting. Now that we took a quick look at the highlights, I just want to share my overall thoughts on the company and in the overall semiconductor market. So I took a listen to their earnings call, and a few things really grabbed my attention. The first thing is for 2022, they expect the total semiconductor market, excluding memory, to grow 9%. This is really good, right? Because this means obviously there's plenty of players in the semiconductor industry. Some of them are going to grow higher than 9%. And I fortunately believe that I own some of those companies that are going to be expected to grow at some high double-digit markets. They also believe that foundries revenue, there's obviously numerous foundries out there, the growth is close to 20%. TSM believes that they can grow and outperform the foundries and grow somewhere between mid to high 20%. This is becoming a huge growth stock. Finally, I just want to share right now, I do not own any shares of TSM. I am in other semiconductor plays. Right now, if I was to enter my portfolio, this would be somewhere of a tier 2 stock. Based on the stock price that I see right now and this kind of overall jump, I personally wouldn't jump in with a big position at the moment. This is more of like a low dollar cost average over time. I do believe there's probably better buying opportunities, but at the same time, who knows when that would happen. But if we take a quick look at their forward EV to EBITDA ratios, we can see they're sitting at about 13.97 right now. It doesn't scream crazily overvalued compared to where it's been in the past year, but compared to it was pre-COVID, obviously, they do see kind of it's a little bit overvalued to there. So like I mentioned, for me, it's more like a low dollar cost average if it was to ever enter in my portfolio. At the end of the day, I do believe this is great news for the semiconductor industry. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.